Hi, everyone. Welcome to Mission for Freedom. It is great to connect with all of you today. Thanks for joining us. We are live on X American News and Rumble. It is Thursday, February 13th. And wherever you're watching from, go ahead and like, subscribe, follow, or share. I know it doesn't seem like a big deal, but it is a huge deal in this digital broadcast world. So if you would be so kind to do that, I would be incredibly grateful. And then we would not be here without you and our sponsors. It turns out this broadcast thing is not free. Didn't know that until I started it myself. And so we would be so thrilled if you connected with some of our sponsors. We would not be here without you and our sponsors. And one of them, of which I am thrilled to introduce you today to, his name is Andy Schectman. He is from Miles Franklin Precious Metals, and he's an incredible human being. He started this precious metals company, Miles Franklin, with his dad. Get this, in their room the size of a closet. His story is like the American dream. It was like I think it was 35 years ago, actually, to this month in February. And you were never going to believe this, but they've surpassed over 9 billion. That's right, not million, billion with a B in sales. And let me tell you why. There are multiple gold and silver companies we could all buy from, right? I mean, there's one a few miles from my house that's super busy all the time, and they're great. But what I love about Miles Franklin, it's like boutique shopping. You know, when you go into these box stores and you go into these places like this, Miles Franklin, their key is customer service, honesty, and trust. And I've shopped around, and they're one of the best in the country. And I have to tell you too, they've not had one complaint in 35 years. So that is amazing in and of itself. But today we are joined by Andy Schectman. We are live to talk about, I don't know if you've been seeing this, but President Trump has been threatening 100% tariffs on the BRICS nations. That's Brazil, Russia, India, China, South Africa. And we're thinking he's already said 25% to Mexico, Canada, things of that nature regarding steel. And so we're thinking, oh my gosh, 100% on the BRICS nations. What is that going to do to our economy? And I wanted to have Andy join us today to weigh in on that. You know, what does that mean for the US dollar? And what is that going to mean, to average Americans? We don't hear this talked about on mainstream media. So I wanted to have Andy join us today to weigh in, to tell us his thoughts on that, and then encourage us and show us ways that we can protect the legacy of our family. So without further ado, please welcome to Mission for Freedom, the one and only Andy Schectman. Andy, welcome. He's joining us. Oh, go ahead. Okay. We're having a little bit of technical difficulties, no problem. But I was glued to the TV today because I know a lot of great things are happening, right? Tulsi Gabbard's confirmed, RFK Jr. now is confirmed. Wow, that is a blessing. But what I could not get my eyes off of was this Trump statement about the BRICS nations. And I just have to quote him because I wonder what you think about this. He said, quote, BRICS is dead. They were dead as soon as I mentioned that. That's the exact quote. And when he's saying he mentioned that, he was referring to the 100% tariffs. He also said, anybody who is with BRICS wishes they weren't, quote unquote. That's what he said. But BRICS is dead. And I'm really excited to have Andy weigh in on this because let me just tell you, BRICS is buying up gold in unprecedented amounts. No one is talking about it. China is. We're here, they're saying they don't have a lot of gold, but they haven't really been honest about their gold purchases. They're also buying, and Andy can fill us in on this, but basically the sludge of silver content, and he'll give us the exact word, but they it's melted down, and they don't have to report that, and they're not reporting it. They're basically being dishonest. And so I thought it was incredibly interesting that President Trump would say BRICS is dead, and he's waving around this 100% tariff flag, which it really has worked. I mean, so far with Canada and Mexico, but man, I just thought that was maybe a little strong and presumptive to say BRICS is dead. So, Andy Schectman, welcome to Mission for Freedom. I am really interested to see what your take is on this latest news with President Trump threatening 100% tariffs on the BRICS nations. And he's saying, BRICS is dead. And his exact quote was, anybody who is with BRICS wishes they weren't. But yet they're developing a gold backed currency, the unit. They are developing strength monetarily, militarily. I thought that was an interesting statement that he just seemingly kind of arrogantly might have said, but maybe there's something I don't know. What do you say about that?
Well, your introduction, Miriam, was so kind. I heard it all, and I think I was on the wrong browser. You couldn't hear me, but thank you for such an amazing, kind introduction. And let's just not mince words. What President Trump is doing in that respect is not tariffs; it's sanctions masquerading as tariffs. Tariffs are used to support a manufacturing industry where it's an unfair advantage, and there's really no manufacturing industry that he is protecting. It's more of a threat. If you unite in a common currency and continue down this road, we will impose 100% sanctions. Really, and I want to talk about sanctions because there's some amazing things happening, Miriam, things I've never seen before. But in relation to the BRICS, look, this is what drove the BRICS together to begin with. It was the weaponization of the SWIFT system, of the treasury market. And this is the path that I would have hoped he would not have taken. It would have been far better after the last 4 years to extend the carrot, not the stick. And quite frankly, I think that it's the wrong move. And I think it will have reverberations and if nothing else, crystallize the rationale that these countries have employed to join together to begin with. So, yeah, it's not tariffs. It's just more sanctioning, pretending to be tariffs. But while we're on the subject of tariffs, I think it's important to take a look at something, Miriam, and I'm going to try hard to not, and I'll answer any questions along the way, so stop me. But I'm going to try hard to not make this overly complex. There is some aspect of it that is, but I'm going to try really hard, if you don't mind, to walk you through what I see. I'm going to go out on a limb and say something that some people may say is crazy, but I feel the same way I did in 2019 and 2020 when I was the only one talking about the BRICS and everyone thought I was crazy and I was either silly enough or somehow lucky enough to say it publicly, and a lot of it has transpired. There are other ways that you can fight back against the BRICS without extending sanctions. And I think that might be what we're seeing right now. Maybe he's trying to front run what they're trying to do. Let me explain. So I'm going to take you back. Some of this we've talked about before, Miriam, but for your listeners, I'll take you back to 2019 when the Bank of International Settlements, the most powerful bank in the world, reclassified gold as the world's only other tier 1 reserve asset. And that's on par with U.S. Treasuries. It's a riskless asset as far as central banks are concerned. Now, primarily, I would argue this is one of the biggest reasons you're seeing so many of the central banks accumulate gold at a level really since that time no one has ever seen. And we've been seeing a slow bleeding down, little by little, as I often say, of the exchanges, the COMEX and the LBMA. And I've talked about this on your show and others ad nauseum, thousands of interviews, screaming that things are different. No one ever stood for delivery on the COMEX market, which is the Chicago or the New York Mercantile Exchange. If you've seen the movie Trading Places, where everything trades, all the commodities, including gold, and also the LBMA, which is the London Bullion Metals Association. That's the oldest metals exchange, 140 plus years old. And these have been the primary exchanges that have traded and set price for gold and silver and other commodities for a very long time. And these contracts that are issued off of either exchange very often don't settle for delivery. They're cash settled. A company like mine might employ contracts on the COMEX market so that if I have 5,000 ounces of gold in my warehouse and the price drops by $100, well, I'm out $500,000. That's a risk you don't want to take with an inventory. And yes, it could go the other way and you can make it, but inventory of a business is not something to be speculated with. So we will sell 5,000 ounces on COMEX to offset the 5,000 we have in our warehouse. And as one goes up, the other goes down commensurate. That's the design of these markets, to offset risk. They do offer the ability to stand for delivery, but most of my career, nobody ever did, less than 1%. So let's keep that in mind. For my whole career, the United States was net exporters of gold. Forever. They've been exporting gold to the global South and the global East forever. And it's always kind of baffled me why we would do that. But nonetheless, that is what it has been. So the last 4 years in particular, the suppression of the metals market, in my mind, has been really foolish. And there's overwhelming evidence to support that the gold and silver market are suppressed by what's called naked shorting, where the banks, the commercial banks, will sell and sell and sell and sell contracts that are not backed by anything but their big checkbook and the ability to keep selling these paper contracts, which drives the price down. And when we look, for example, at the market in London, they have 300 million ounces of silver that are unencumbered in their exchange. We'll call that the float. Yet the banks that are on the LBMA trade on average 2.9 billion with a B ounces of silver per day, 10 times the float. 90% of it is paper. So they can create a perception of reality, either buying or selling with paper. They don't have to have anything behind it. Remember, because really no one ever stands for delivery, right? And so the metals market, gold in particular, has been suppressed for a very long time largely because of a term in economics called Gibson's paradox, which speaks to the inverse relationship between real interest rates and gold. And so they wanted to maintain an illusion of prosperity through low interest rates, which really got us into this problem, created mass speculation, mass indebtedness, created distortions in asset prices, like what's your house worth at 3% mortgage, 7% mortgage, 10% mortgage. So if you suppress the cost of money, interest rates, you get distortions in asset prices and misallocations in capital and resources. I have a company, money's so cheap, I'll buy another building, I'll hire 60 more people, I'll start another division, and then, boy, what happens if rates go higher? That's a problem. Anyways, if you're going to step on interest rates to create that illusion of prosperity, of success, of wealth, where your home, because the value keeps going up with low interest rates, people can afford more for less, or you're going to buy that car. I'll buy the extra, I'll buy the one with leather and a sunroof because it's 72 months, 0% interest. When you create low interest rates like this, you suppress it instead of letting the market dictate where those interest rates should be, which is a function of risk. If the bankers decide that we're going to suppress it and you maintain this illusion, you create all of these disparities, these anomalies in prices and distortions in asset prices and resources. So anyways, if you do that, you have to step on gold, because gold is the canary in the mining shaft, because Gibson's paradox says if you have low interest rates, because gold pays no interest, it should be much higher, and vice versa. So they step on it. And they've been doing that for a very long time. And there's all sorts of evidence and case study and court cases and admissions and fines. JP Morgan, as an example, paid a $920 million fine to the Justice Department for suppressing the metals market a few years ago.
Yeah, and I think you just had a whistleblower on you interviewed recently regarding silver, right?
Yeah, and that's exactly right. And so there's all sorts of manipulation, there's all sorts of fraud, and it's coming to the surface. But the countries in the BRICS, I've been saying for the last 4 years, understand this. And they've been vocal about it. They understand exactly what the West is doing by holding down the paper price. So they buy contracts and stand for delivery. And they have been standing for delivery to a degree that slowly has been draining the exchanges. Now, I admire their ability to be plotted and
Calculated.
calculated, and to do it slow enough so as to not alarm the powers that be, to not cut off their nose to spite their face, to continue to slowly drain it, death by 1,000 paper cuts. So we get to November and everything has changed. And what I want to say to you is that something is going on right now, and they're saying it's because of the Trump tariffs. I don't believe it. Something is going on that I would say is the most significant development I've seen in a very, very, maybe ever long time in the metals market. So, all right, in November, some interesting things happened. Obviously, Trump won the election, thank goodness. And in November, the United States, for the first time that I can ever remember, went from a net exporter of gold to a net importer, which is very strange. And, I guess we could say there's coincidences there. I don't think so. I think Trump is doing something here, and I'll explain. So since November, we've seen about 12.5 million ounces of gold and over 40 million ounces of silver move from the London vaults to the United States vaults. Now, the conventional wisdom is, well, he's talking about putting tariffs on the import of gold and silver. And all of these contracts on COMEX that are naked, meaning the banks have enough money to keep shorting the price to keep it suppressed, there's nothing standing behind it. But wait, we're beginning to see massive deliveries. Somebody is taking delivery. Check this out. In the month of February, the February gold contract, there was a record 59,296 COMEX gold contracts. Each contract is 100 ounces of gold that stood for delivery. So if I short the contract and you take the other side of it, you go long, meaning I'm selling it and I don't have any gold behind it. That's called a naked short. If I have gold behind it, it's a covered short. I'm selling it, you're buying it, and most of the people just play it as a cash instrument, an investment, a speculation, or a hedge. But instead, you say, you know what? I'm going to stand for delivery. I want the gold. 59,296 contracts at 100 ounces apiece stood for delivery on the February gold contract. That is the largest delivery in the history of the COMEX market. It surpasses the largest by over 12,000 contracts, which was in June of 2020 during the pandemic and QE to infinity. Wow. That's 5,929,600 ounces of gold. Try multiplying that times 2,900, the price of gold, and your calculator will show you the E. It doesn't even go that high. 13,735,000 ounces of silver stood for delivery in the month of February. JP Morgan just announced that they are delivering for the February contract $4 billion worth of gold into the COMEX. $4 billion. Now, there was a woman named Blythe Masters who used to run their trading desk, and a few years ago, she was all over YouTube saying JP Morgan never buys gold for their own account. It's always a customer account. Now, I ask you, who the hell's got $4 billion to buy the gold? Now, follow me. This is going to get interesting. I promise. All right. The London Metals Exchange, where a lot of this metal is coming from, it's all flowing. The contracts, whether it be London or New York, are very fungible. And either one can do what's called exchange for physical. I have a contract. I can exchange it, send it to London. They take it, fungible, it's money, and they can exchange it for the physical and ship it back to New York. So it's an exchange for physical. Normally, the exchange for physicals go either from the US or London to China or to some other part of the world. But now the exchange for physical is coming back here. And we're led to believe it's because of Trump tariff threats. So I think he's saying, or someone is saying, yeah, we may do this, we may not. So they'll send the gold back without thinking much about it to us, to a record level. Now, not only have we become net importers, but now we're seeing the largest deposits into COMEX of all time and the largest deliveries, standing for delivery, of all time. Something is going on. So remember, what is gold? It's the only
Well,
other tier one reserve asset next to US Treasuries, right? So it's significant. All right. The metal that's coming out of London is, and think of all of the contracts I told you in silver. In gold, they trade about 2 to 2.5 times annual global mine supply every single day. There's way more contracts than there is metal behind the gold holdings. So when you stand for delivery in London, it's supposed to be T+1 delivery. T stands for the trade day, 1 day to settle. Give me my gold. It's now 6 to 8 weeks. That sounds like a default to me. So
wow.
you expect to get your gold. Today is, let's say it was Wednesday. I need my gold by Friday. It's T+1. Let's do the deal. Yeah, you'll get your gold Friday in 2 months. And this is getting very interesting. So now we take a look at a few other things, because there's a log jam. They say it's such a log jam we can't get. Yeah, right. It's called you don't have the metal, and all of this metal is coming back to the United States, and we are now a net importer of the only other tier one asset in the world. Now let's talk about J.P. Morgan for a moment. I'm going to connect all of these dots at the end. J.P. Morgan paid a $920 million fine for manipulating the metals market a few years ago. The largest fine the Justice Department ever handed out. Remember, I said there's all sorts of proof that the markets have been manipulated. JP Morgan paid a $920 million fine. Their head trader, Michael Nowak, is still in prison. And it always bothered me, Miriam, that they were allowed to be the custodian of SLV, the world's largest silver trust. And you're talking a massive stockpile of silver. And they allow the company that just paid almost $1 billion fine for manipulating the metals market to be the custodian, along with BlackRock, of the world's largest silver trust. They made $1 billion that year in their trading desk for metals and paid a $920 million fine. So they walk away 80 million up, little slap on the wrist. A couple people go to jail for a few years, and they still get to be the custodian of the world's largest silver trust and a few others. HSBC Bank has always been the custodian of GLD, one of the 3 or 4 largest stockpiles of gold in the world. Guess just who took over as the custodian of GLD? Yes, that's right. JP Morgan is now the custodian, along with BlackRock, of the world's largest silver trust and one of the world's largest gold trusts. And get this. JP Morgan right now, as far as in terms of GLD, has now in their 2 vaults, one in London, one in New York, hold more gold than almost 60% of all the G20 countries and part of GLD. Now, people will often ask me, do you think gold and silver will be confiscated again like he did? President Roosevelt in 1933, his first act in office was to confiscate gold, and he paid everyone $20.56. That was a lot of money, the extra 56 cents for their $20 gold pieces, which was in essence an ounce. And then he devalued the dollar immediately by 40% and pushed gold up to $35 an ounce. And all of that extra liquid injection, if you will, from the confiscated gold and the devaluing of the dollar is what reliquefied the treasury. Now, I think Trump understands this. Now, I'm not saying he's going to confiscate gold, but when people ask me, will gold be confiscated? For 10 years on every podcast I've been on, I said no. I think they'll take the ETFs like GLD and SLV, which attract all the fund money, all of the managed money, because they don't want to buy physical gold and take it out of management with a company like mine, so they put it in an ETF. The ETFs do not allow you to take possession. Only the commercial banks that funded it, the massive funds and hedge funds and commercial banks that fund the baskets of gold and silver, well, they can take delivery. So the average person can't. So you have these huge stockpiles of gold and silver held by JP Morgan. And if there ever was a confiscation, instead of confiscating gold physically from people like you and I, when countries like communist China and Russia and the majority of the world is promoting and endorsing gold ownership to their people, if the land of the free and the home of the brave confiscated gold and activated eminent domain, it's game over. But what if you took the ETFs and you're sitting on these massive stockpiles instead of going door to door and risking that backlash? You take the ETFs and you say to the world, what? We didn't do anything. We just closed these 2 funds. The prospectus tells us you can do that. The money that was in everyone's accounts is in their money market. They're free to go buy gold and silver legally in this country. So I've always felt that. So now you have JP Morgan controlling these massive funds. You have JP Morgan putting $4 billion in gold into the COMEX, one of the largest deposits ever. You see the largest deliveries in the history of the COMEX. We are now a net importer of the only other tier one asset in the world, but it gets better. I interviewed Judy Shelton the other day. Judy Shelton was Trump's nominee in 2016 to be the head of the Federal Reserve. She, in fact, grab the book right here. She wasn't confirmed with the partisan crap that we had last administration. It was very hard for anything to get done. She didn't get confirmed. This is her book, Good as Gold, and she's an amazing lady, incredible lady, and she was an advisor to Trump the whole time, and said they discussed back then issuing treasuries backed and redeemable by gold in order to inspire confidence in a system that has lost all confidence, whether it be through inflation, weaponization, default risk, all of the nonsense that we saw over the last 4 years. Countries have been abandoning our treasuries. And it's interesting when you talk about who's been buying all the treasuries. Well, it's us. We've been buying, there's $7 trillion in money markets. Everyone's chasing yield, higher interest rates, and everyone's buying treasuries, whether it be the pension funds, the insurance companies, or the $7 trillion in money markets. We hold the majority of the treasury debt. Of the $200 trillion in debt that we are, 36 trillion on balance sheet and close to 170 trillion off balance sheet, Medicare, Medicaid, Social Security, government military pensions, that's all owed to us. So if we ever did reset, only about $8 trillion is owed to the rest of the world. The rest is owed to us. And so keep that in mind. And so no one wants the treasuries anymore. Judy says, well, we should peg it to gold and make it redeemable in gold. And that's how you inspire confidence. I said, I agree with you, Judy. She, I believe, will be on the Federal Reserve Board of Governors this time at some point. And I also think that when Powell resign or his tenure is up next year, I think she could very well be appointed to the governor, the chairman of the Federal Reserve, the chairperson of the Federal Reserve. And so it gets even deeper in this. So I talked to Judy and I asked her, why do you think they haven't audited Fort Knox since 1956? She says, I think it's a disgrace. They need to do it. They say it costs too much money. The logistics are a challenge. And she says, it's nonsense. We're the United States of America, for goodness sake. Spend a few $1 million, get it done. I said, Judy, do you know that gold is held on every central bank balance sheet? Now, Miriam, you can't make this up. Do you remember the name of the account that gold is held in on every central bank balance sheet? You ever remember me talking to you about that? You can't make it up. On every central bank balance sheet around the world, on the balance sheet, gold, the entry for gold for central banks is held in what's called the gold revaluation account. Can't make it up, right? The head of the Dutch National Bank for the past 2 years has been screaming, we need to revalue gold. In Europe, gold is valued at $35 an ounce, the old Bretton Woods price, on their balance sheets. In the United States, it's $42.22, slightly after Nixon closed the gold window, and they then pegged it there. So on the U.S. balance sheet, our 8,300 metric tons, which hasn't been audited since 56, is valued at $42.22 an ounce. The head of the Dutch National Bank for the last 2 years has been screaming, we need to revalue gold to a level sufficient enough to offset our liabilities, all this debt that we've accumulated. Members of the German Bundesbank, same thing. We should revalue our gold to offset the liabilities of all this debt we've created. Senator Cynthia Loomis from Wyoming at the Bitcoin meeting in Tennessee recently, after Trump spoke talking about the possibility of a strategic Bitcoin account, we need to revalue the gold that the Federal Reserve holds on behalf of the Treasury to a level high enough to where we can take proceeds to buy the Bitcoin. Now, you can't make this up, the gold revaluation account, but isn't that what Roosevelt did in 33? Yeah. He confiscated gold, devalued the dollar, revalued gold by 40%. Kind of happened again in 1971 when Nixon closed the gold window at 35 an ounce, and the market to today has revalued gold at 2,900, despite all of this suppression by the banks and the central banks and the commercial banks. So Jude, I said, do you think they'll revalue gold, Judy? And not in so many words, she more or less said, yes, I do. I think gold could very well be revalued. Now it gets even better. Our Treasury Secretary, Scott Bessent, his largest holding is gold. But did you hear what he just said a few days ago? He said, we want to monetize the liquid asset side of the balance sheet, the liquid asset side of the balance sheet. Now, if you want to throw up, grab a garbage can and Google what are the assets of the United States government? The assets of the United States government are pathetic. We owe about 200 trillion, right? Because the Social Security is 77 trillion underfunded. Trillion seconds ago, by the way, Miriam, 31,688 years ago. Social Security is 77 trillion or close to that. Medicare Part B, 99 trillion, Part D, 22 trillion, and it just goes on and on. That's off balance sheet. Trump won't touch that stuff. He's already said so, right? Won't touch it. Won't touch Medicare. Won't touch Social Security. And then you have the 36 trillion on balance sheet. So, I mean, you can deal with that and start chipping away at it. But anyways, so he says, I want to monetize balance sheet. Their largest asset of the United States government, the largest, is student debt. 40+% of our assets is student debt. They passed a law half a dozen years ago or longer saying, if you have student debt and you file bankruptcy, we'll take your Social Security. You can't get out of it. It is a receivable and an asset. That's why when Biden was trying to give away $1 billion or $2 billion, that was a drop in the bucket, but it not only was it immoral and ridiculous, he was chipping away at the largest asset of the U.S. government. Number two, so you can't monetize that. Number two is military, bases, guns, airplanes, aircraft carriers, can't monetize that. Number three is real estate. You could, I guess, monetize that. But what about gold? Held in the gold revaluation account. But it hasn't been audited since 56. Is it there? Not sure. So now we're net importers since Trump becomes president. We're seeing the largest inflows in the history of the COMEX, the largest deliveries in the history of the COMEX. Who's got $4 billion, Miriam, to buy gold?
That makes no sense.
Right. So what if it's the Federal Reserve? Or what if it's the government? What if he instructed them all and under the guise of tariffs, not telling them what we're doing, but I might impose tariffs so they're not threatened, thinking it may never come back. And then JP Morgan takes over as the custodian of GLD right around the same time. They already are the custodian of SLV. They and BlackRock, arguably agents of the government. Could it be? Could it be that they intend? Now, one other thing, as the price has gone up ridiculously in gold over the last few weeks and months.
Yeah, it's been hitting all-time highs.
And we've seen GLD, that's right. And we've seen GLD, who now JP Morgan controls, go like this. Everyone's selling out of GLD. Why? Well, the conventional wisdom is strong dollar, strong interest rates, Trump euphoria, the Trump risk on trade. No, it's not what it is. It's the insiders like JP Morgan. Remember I told you they can do? They can take the metal out. It's called share redemption. They take their shares and they sell it back to the fund and they pull out the gold. So 16 tons as the price has been going up. Shouldn't it go the other way?
Yeah.
Well, they are redeeming shares, pulling the metal out, securing it before something happens. So I guess I'll just simply say this to you. It is my belief, and I'm going out on a limb saying that they are doing something far bigger than bringing it home because of the threat of tariffs, whereby those short contracts could be in very big trouble if you can't get the metal and have to pay a tariff to get it. That's what they want us to believe. But most of the short positions are by the commercial banks that are all part of this game. My guess is Judy Shelton wants to issue treasuries backed by gold. She told me that they're going to do it July 4th, 2026, the 250th year anniversary. They've discussed it. It's coming out. Treasuries backed by gold, redeemable in gold. Well, what if you don't have enough gold to do it? You got to get it here first before you do it. And what about letting the price go higher and higher and higher and higher and higher and revaluing it inside the gold revaluation account? And instead of confiscating physical gold, the pimple on the elephant's rear end, the people like you and I and others that physically own it, how about you have JP Morgan hold the largest silver trust in the world and a monster gold trust and many other ETFs that gives them the ability to grab it all and say, well, we didn't do anything. We just closed the account. You put it all together, and I would say that they are planning to revalue and remonetize gold. Scott Bessent just told us they're going to remonetize the asset side of the balance sheet. What other asset could they do besides gold, which is what? The only other tier one reserve asset in the world that Judy Shelton wants to do what? Peg it to the treasury market that is seeing nothing but outflows. And now what are we? We are but a net importer of gold and seeing the largest inflows that we have ever seen, ever in the last 35 years, in my career anyway. So I'm going to go out on a limb and say, just like I did when I went out on a limb and said Saudi Arabia and all these countries are going to move away from the dollar and unite
right.
with the BRICS. And everyone thought I was crazy. Well, I'm going to say this right here and right now, and maybe it's foolish, but I truly believe this is far deeper and far bigger than just Trump threats of tariffs. We are repositioning and getting ready for some form of gold remonetization, revaluation. And by the way, Trump would only need to say to Scott Bessent, Scott, tell Jerome Powell to revalue gold. Every $4,000 increase in the price of gold is $1 trillion free and clear to the Treasury. You put gold at 12,000 an ounce, that's $4 trillion that the Treasury gets free and clear, just like that.
Instant.
So could it happen? Why not? Who's been buying it all? The central banks. Who does it benefit? The central banks. And the last thing, and then I'll take any questions and shut up. What else does Trump want? A weaker dollar. He always says that, right? So if gold goes way up, what happens to the value of the dollar? In its relation, it goes down. Mm-hmm. But our holdings of gold go way up. And the countries that have been accumulating gold, their value goes way up. This is a win-win for the whole system, largely. Of course, it creates inflation and all sorts of other things in this country, but it's far better than outright hyperinflation or defaulting. This is a way for us to, I think, take a positive step forward and start to think about ways out of this massive debt cycle, this massive debt tsunami that really there aren't many ways out of. And I think this is the path that he's chosen.
I have so many thoughts on this. It's mind-blowing, actually, what you're saying. And for those who don't know Andy, I mean, Andy, you are essentially one of the most world-renowned experts on, precious metals and on gold, with gold. And I think it's incredibly important to think about the fact that, and when you've said this, that we are accruing $1 trillion of debt every 100 days. And it's those areas that you mentioned that Trump's not going to touch: Social Security, veterans benefits, Medicare, Medicaid. I mean, and I'm thrilled to see what Doge is doing. I mean, that's great. And, a million here, $1 trillion here, whatever. But I've heard you say this, which I think is incredibly important to drive home and for us to keep in mind. And that is, when you're talking about buying gold, you're buying wealth, but we can't just sit back and go, oh, President Trump's in office, he's going to fix our economy. He's a businessman. He's a genius. Everything's going to go away. And when you said that to me last year, Andy, I never forgot what you said, because I was thinking, wow, $1 trillion every 100 days. So all these things we're hearing Elon talk about, it's great, but it doesn't fix the problem, people. It just doesn't. And I don't care if President Trump's in there or if Biden's in there. What is happening is, it's like if you were at home and you were charging more than you made, and you kept doing it month after month after month after month, and then the loaner is going to want to quit loaning you money to buy a new car, to buy whatever, because you have so much debt. They look at that balance sheet and say, there's no way that you are going to be able to pay this back. And so that's why I think it's so incredible what you're saying, not just about revaluation, but just about the accruing of debt. I mean, we as the United States, no matter who is our president, unless, like you said, we have some pain, we get rid of some of those programs like Medicare and Medicaid, and Trump is saying he's not getting rid of them. I mean, it is not going to end well, whether we have Doge or not.
Well, get this. Last year, the tax revenue of the United States was $4.9 trillion. Okay, that's how much they took in taxes. So try and do the math with this. By 2028, which is what, 3 years? Over 28 trillion in outstanding U.S. government bonds will mature by 2028. So we're taking in, let's call it 5 trillion a year. And in 3 years, that's 15 trillion. But we owe by then 28 trillion. Now that doesn't take into account the $1 or $2 trillion deficit we'll have this year and next year and the year. So how do you work it? I mean, you're right. And if talking about tariffs, you put a 25% tariff on every product that comes in this country, it wouldn't amount to under $1 trillion. And that's not the answer. The answer is you have to cut spending, period. And yet he won't do it. He won't go after the things that are the real big problems that aren't even calculated in that $36 trillion debt. So if you have 28 trillion coming due before you have printing 2 or 3 trillion every single year in debt, and when you say, I always think it's nuts when you think a trillion seconds ago is 31,688 years ago, but it's also nuts saying that at the speed in which the debt is accruing, it's roughly $100,000 a second. I mean, think of the party you could have at 100,000 a second, and then you see all the mismanagement and the waste and the fraud that Doge is uncovering, and God bless them for doing it.
Yeah, I mean, it's a good thing. I'm glad that they're doing it. And really, it just quite frankly makes me angry when I think about how we sent half $1 million to Nepal to advance atheism. I'm like, that is completely, 180 degrees opposite of our Constitution. Andy, I have a couple of questions here. I just wanted to address here. MC says, what's the biggest mistake people make when buying precious metals?
The biggest mistake that I see is falling prey to companies, particularly those companies that focus solely on IRAs, that sell products that are very, very obscure. Usually they all follow the same model. Quarter-ounce gold coins that they sell for 900, 1,000, 1,100. Do the math times 4. Gold's nowhere near that. And 1.5 or 2 ounce silver coins typically that sell at 90 to 150. Oftentimes they have slick company spokespeople. If I could really show you the stuff that I've seen, it's horrific. When and people's lives.
That's why some people get afraid to buy it, because they just don't trust.
Well, I mean, I think the bottom line is you make it really simple, right? There's 6 major mints of the world, but if you want to make it easy, buy either United States American Eagles and Buffaloes or Canadian Maple Leafs. You'll never have problems. And don't buy proof coins. Buy the regular commercial strike coins that you get from a dealer like myself. You can buy a proof coin directly from the U.S. Mint, and some dealers try and sell them and say you should buy them. They're special. It's nonsense. It's the same piece of gold. Commercial strike is a piece of gold. They stamp it, they put it in tubes of 20 and boxes of 500 and sell it to distributors, send it to distributors like me. You can't buy that from the mint. You have to buy it from a dealer. The proof coin, you can buy at usmint.gov or from some dealers. They take that same piece of gold, they polish it under an industrial buffer till it shines. They stamp it 4 times for greater definition, put it in a velvet box and charge 2 or 3 times what it's worth. Not the way to do it. That's the cherry on top of a sundae. It's not the vanilla ice cream that you're trying to build. So you buy gold and silver bullion coins like the American Eagle, like the Canadian Maple Leaf, and others, Australian kangaroo or whatnot. But if you're really living in North America, you want to make it simple. It's Pepsi and Coke. It's immediately liquid everywhere. It's sight unseen, non-subjective. And you can go to every online site in America or call any dealer and get a current price for that stuff. So it's easy.
Yeah, and it's so easy to shop around because it's it's kind of like diamonds. When you buy a diamond, you get the specs, so you can compare apples to apples. And that's what I do. I just listened to you and I got the gold eagles and and the silver eagles.
And now everyone wants those.
Yeah.
I mean, you can sell them like that without a second thought. You know what they're worth. I mean, it's just, remember when we were kids, keep it simple, stupid, KISS. Keep it simple. Buy American Eagles and buy Canadian Maple Leafs, and you're buying the highest quality, most sought after, non-subjective, liquid gold and silver coins you can own.
And I have to say, I've heard others say this too, but one thing that I love about gold and silver is that you can liquidate it very quickly. I mean, land is great, hard assets are great, homes, flipping homes, real estate. But man, you can't dump a house and land in 48 hours. And so that is another, I think, wonderful thing. We've got some amazing folks in the live chat. We have Crypto Dude 99 asks, I invest in crypto. Why should I care about gold and silver?
Maybe you shouldn't. I mean, I look at gold as 5,000-year-old wealth. Why should I trust digital code that's barely a teenager? Um, I'm talking about the age of the crypto market. So I could phrase it the other way. To me, one is an investment, a speculative one at that. The other is wealth. My gold and silver, I don't look at it as an investment. You know, we've talked about the story where my dad said, buy some form of gold and silver every 2 weeks or I'll fire you. When I started this company 35 years ago, he's been retired for 2 decades, but I've still honored that promise. Don't have to worry about getting fired any longer, but it's the best gift I've ever been given. The accumulation of gold and silver for 35 years every 2 weeks is not my investment, it's wealth. I have a little crypto. I have mining shares. That's my investment. If you ever go to the casino and you play blackjack and you want to walk out a winner, every hand you play, take a portion of your winnings and put it in your pocket and never touch it. And when you leave the casino, chances are you're a winner. If you ride the speculative wave of crypto, you can very well make a lot of money. You can also lose a lot of money. It's very speculative. And if you're going to kind of marry the two, which is I believe the sophisticated way to do it, or the smart way to do it, is let's say you have X in your crypto account, and every time it gets X plus something, 10%, take off the 10% and buy real gold and silver, and that's putting chips in your pocket, and keep your initial principal and keep letting it ride up, pull it up, because too many people think of Cisco and the .com, whoa, and then bang, everyone lost everything. I'm rich. Oh shit, I'm broke.
Yeah,
And that's what happens. And so I think you don't do what everyone does. You pull profits off, and that's the way that you win in a game, going from speculative investment to real wealth. Don't confuse the two. To me, they're not even in a financial pyramid. Gold's at the base of the pyramid, and cryptos, along with mining shares and other speculative things, are in the top of the pyramid, where you don't risk as much, but the reward can outpace the bottom 80-90% of your financial pyramid.
Yeah, and you can afford to lose because you've got your base really firm. We have at Concerned Citizen. Will cash disappear in the future? What happens if everything goes digital?
Well, I think instead cash will become more scarce. Trump has talked about not issuing a CBDC, and instead, what I think you'll see is the proliferation of more and more stable coins, which is more or less the same thing, only issued by third party like Ripple or Tether or USDC, which is backed by Goldman Sachs, if I'm not mistaken, not by the federal government, but yet the government will control the on-ramp and the off-ramp. They'll see it all. and Judy Shelton even said to me, when they issue these treasuries, it is her hope and belief that they will issue stable coins. Others will issue stable coins off of these treasuries. So I don't think we'll go cashless, but you're seeing more and more businesses and establishments. I was just skiing in Aspen. Aspen is not cashless, but Vail, which is the largest ski resort owner at least in North America, they own resorts all around North America. They own Whistler in Canada, and even little ones in Minnesota. They're cashless completely and totally. So we're kind of moving in that direction, but I hope by him signing this executive order saying no CBDCs, we won't. But I think we're still moving digital, and it would be through stable coins and probably be incentivized to use them. So it'll be a little bit of both, I guess, is what I'm trying to say.
And I'd love to have you back on to talk about that stable coin, because I believe that, and crypto, that is just my personal opinion. Just looking at different subversions of countries, whether it was Germany, Nazi Germany, or the Bolshevik Revolution, or even Mao's China, there was and even United States, when they took God and the Bible out of school, there was always a marriage at first. I mean, if they came right out and said, this is what we want to do, the people would reject it. So they have to stay under the radar, kind of marry these two concepts, get folks used to that, and then slowly get rid of. I mean, that's just what
I agree,
and
I agree, and you can see that already with the rise of and the acceptance of cryptocurrencies and things like Zelle and Venmo and So, my youngest daughter, whenever she asks me for cash, I give her cash. And I don't want money. Can you just take it or leave it? Can't you just
You're
put it
like,
on my
your
Apple Pay?
dad owns Miles Franklin. You're not getting a
It's
cash
so
app.
annoying to me. But, I think if they really stopped and thought what cash is, it's freedom, it's privacy. And in
It
a
is.
world that has become so, with such lack of privacy, so monitored, the surveillance state, I think it's not a bad idea to embrace cash myself.
Well, we just have a few minutes left. I want to get to a couple more questions. We have lots of folks in the live chat. Thanks so much for being here, guys. It's at Not Rich Yet says or asks, if I only have $100 to invest, what should I do? Buy a little silver or save up for gold? That's a great question.
Sorry, I have a new puppy and she's jumping all over me. I had to
Oh my gosh,
bring her to
so
say hello.
cute.
She won't stop biting my leg.
What's her name?
Um, I mean, I think it doesn't look. It doesn't matter the amount. What matters is understanding the power of compounding. Like I've been buying every 2 weeks for 35 years, and for a very long time. I started when I was 19. I didn't have two nickels to rub together, and so whether it's buying 1 ounce of silver. Remember, back then silver was $3-4 an ounce. A lot easier for me to buy silver back then, but buy a few ounces of silver every chance you get and put it away. It's like anything. Okay, I have to put her down now.
Yeah,
She
she's
won't leave
like,
me alone. But it's like anything, whatever you do. See, part of the thing with cryptos that somewhat bothers me is that people have grown accustomed into instant gratification not being fast
yes.
enough. And that's not how anyone our age, Miriam, found success. We found
Well,
success
look
through
at
hard
Ozempic.
work.
Look at all the drugs to lose weight. I mean, everything we want it yesterday, and that consistency, little by little, investing and not thinking about like, oh, I just bought 2 ounces of silver for close to $60, and just not thinking about the money's gone, and now we want everything yesterday, and we want the rush, the adrenaline rush of making a lot of money with crypto, and that's really not the way our country has grown to become what it is today. It was with consistent hard work.
Yeah, it's a dopamine rush for sure. And that's why you see the rise of online gambling everywhere. And it's not healthy because you look, when I started in this industry, the people I talked to were people your grandfather's age. They were the World War II vets. And I mean, nothing came easy to them. And they understood the concept of hard work, of savings, of investment and reinvestment, of being prudent, of not. I remember my grandfather saying to me, "Are you kidding? I would never buy a car unless I had enough money to pay for it. I would never take out a car loan." And
Don't
so,
hear that today.
yeah, and it's funny because I have no debt. Fortunately, I've always been smart about not having any debt, and my credit rating sucks. And I asked the banker, I'm like, "Can you tell me why my credit rating sucks and I have no debt and I own a company?" "That's because you don't use debt, sir." "Oh, so I have to go into debt to have a good credit rating. The fact that I don't have any debt means I am a higher credit risk."
So
So
rigged.
they want everybody to go into debt. That's what they teach us. That's the
Yeah.
system. So instead, let the laws of compounding work for you instead of against you. And it doesn't matter the amount. It's just whatever you can do. Who knows what tomorrow may bring? Who knows? And I think that's a good way to become regimented in whatever you're doing, whether it be exercising, working on a relationship, or saving money.
We just have a minute left. I just want you to share where our listeners can find you and learn more from you.
Yeah, they can send us an email at info@milesfranklin, and make sure that you put in the subject line that you came from this show that Miriam sent me. Request our price sheet. Our price sheet will be as good or better than every company in the United States. We don't publish those prices online, and there's a gazillion reasons why I don't. I know it frustrates some people, but take the time just to send us an email. There's no obligation. No one will hound you. No one will bother you unless you want to be contacted. And just put on there, want to see the price sheet or any questions that you've seen on this show, and we would be delighted to help any way that we can. And it's that simple. I think you'll be glad that you did, whether it be just the price list or questions on IRAs or whatever. If you don't get something back from us quickly, check your spam, because a lot of times or sometimes emails from a corporate server get flagged by spam folders.
Yes. And you also have a podcast.
I do, and it is the Miles Franklin podcast. It's called Little by Little, my personal one, and I started it in June, and it's been a ball. I have to have you on, Miriam, and we can do this. We can do a live stream. You and I can talk to my people, and they'll get to know you, and which is important. So
Well, thank
people.
you. I can't tell you what a blessing it has been to learn from you today, and I hope folks will just invest and do what they can to purchase some gold and silver. So that is a wrap. I'm so sorry we're out of time. I could talk to you
That's
for
okay.
a
No
million
worries. I
hours,
get
but
you, Miriam.
thank you
Thank
so
you.
much for being here, Andy, and thanks for all that you're doing to help us protect our legacy and our families.
I
God
hope we
bless.
can do it again soon. You take care. God bless.
You too. Thank y'all so much for joining me. As always, email us at missionforfreedom@gmail.com and tell us what you think. And then you can call our number if you'd like to purchase some gold and silver. That is 1-833 21 freed FREED, and we can have a conversation about purchasing some gold and silver today. So thank y'all so much for being here. God bless, and we'll see you next Tuesday.